What's up, y'all? So here I am making this video about Facebook and being on Facebook as a platform as far as social media and being in that environment that almost made me sell my investment in Facebook because of what I was seeing. So it's going to come a point where you may have an investment and you're on Facebook and it could hinder you and your investment or put some seeds in your mind about your investment. And so let me give you some backstory. I've been in Facebook since, I would say, the beginning. It was shortly after they went public, maybe about 3 or 6 months after they went public. So I've been investing in Facebook for a long, long time. And I've watched all the, how can I say, backlash they got from the beginning, because, and this is coming from not just people on Facebook, but at that time it was coming from the mainstream media saying that Facebook couldn't monetize, Facebook couldn't make money, Facebook couldn't move from desktop to mobile, Facebook couldn't do this, Facebook couldn't do that. And the reason why I invested in Facebook, because I envision their vision of connecting people around the world. And they said from the very beginning, they're not worried about making money. And so that was a vision that I bought into because I use Facebook and it allows to me to connect with people around the world and share my knowledge, you know what I'm saying? And also gain knowledge from other people. So it's it's something that I bought into. And here we are, fast forward, that's what it's doing. And so when the pandemic happened and everybody's on Facebook because they ain't working, you know what I'm saying? They're at home, shuttered, or working from home or whatever. And the stock dropped. I mean, it dropped like a rock. But we're in a pandemic. Everything was dropping. And so it kind of made me think, damn, should I be selling this mug? You know, I'm already up. Even with the pandemic drop, I was up. So I was like, they didn't buy in where I bought in. You know what I'm saying? Everybody's gonna buy an investment at a different time period, at a different price. So when you're listening to people, you have to find out where their purchase price is. Their purchase price is. Because they could have bought something at a top, at a peak, and you could have bought something at a low or at a better price. And so you're not impacted by a drop. Hell, Facebook could still drop, and this is what I started to do. I looked at it at the price I paid and the price where Facebook was at, and Facebook would still have to drop a considerable amount more from that low to get to me, for me to even be at break even. And it wasn't gonna go that low. So that's how I was looking at things. And I said, it's just, let me just get off Facebook. You know what I'm saying? Just focus on private groups, focus on my own private group, and just not be on Facebook. So yeah, that's how I almost fumbled a bag. So that's it, man. And then I'm gonna read off this right here. Knowing when to sell, losing investment. Now, I can't talk fluently on this because I don't sell investments. I have a reason as to why I purchase an investment. Either I believe in it, I believe in the company, or I believe in their vision, and it's not going to be a short-term game. It's going to be a long-term game, and it may be decades. Um, and I started to think about it, and Sprint was the only company I ever sold, and I just got tired of it because they couldn't perform worth a crap, and all their mergers and acquisitions, and they just couldn't get it together as an investment for me. So I am selling Sprint, and so and fast forward, where is Sprint now? I think T-Mobile bought Sprint, or they merged, or whatever. So um, so yeah, and I often thought about selling my marijuana stocks in the cannabis. No, hold up here. In the cannabis sector, but the whole sector is down, and I got into that because I believe in the marijuana sector. I believe in the medical side of it, and people being able to get medical help that they need to ease pain versus something from the pharmaceuticals versus a drug. They can get something more natural and probably give them um, some better ease. So that's why I invested in the marijuana sector. But I got ahead of the government. And when you invest ahead of the government, meaning the government's legislation on that sector, you get pummeled. They come in with their heavy hand and stop that sector from doing what it needs to do and being a free market. And as you see that slowly states are approving, whether it's approved for recreational or just approved for medicinal or whatever. And then now, fast forward, I think they just reclassified it to be the same as Tylenol. So this took a long time to get to this point. Now the next point is, or the next phase is, when they are allowed. It's called, I think it's called a free banking or something, that's going to allow them to not have to operate in cash. They'll be able to open bank accounts and have merchant accounts and all that they can't do now because it's not federally legalized yet. It's coming. So all of my marijuana stocks, I'll continue to hold. Have I ever thought about selling them? Yes, but I knew it was a risky investment. So when you have something that's a risky investment, you make sure that it's only a small portion of your overall portfolio, so that when it gets pummeled like it is now, it's okay. Even with those stocks being down the way that they are down in my portfolio, it's not stopping my portfolio from performing. I mean, I'm killing the broad market, I'm killing the S&P, I'm killing everything because of the way I buy my individual stocks inside of my Roth IRA. So my Roth IRA is separate from my retirement account, which is my TSP at my employer. And my employer, I only have access to certain investments, and those are a basket of investments. Essentially, the S&P 500, and they have small cap funds. I don't mess with the small cap fund. I just stick with the S&P 500. So over there in that account, that's like my foundation. Inside of my Roth IRA, that gives me access to individual stocks. I can still buy ETFs in that, but I'm like, my retirement account is essentially an ETF. My Roth IRA, I need individual companies in there that can grow more than my TSP, which is what I'm doing over there. I can invest in companies, especially this, and this is the key part. When the market goes down, when we have recessions, when we have pandemics, when we have market pullbacks, any of those large major events, that's when you want to be purchasing more. Like Warren Buffett says, be greedy when others are fearful, and be fearful when others are greedy. If you still have a job and you still have an income coming in during these time periods, there's no reason why you shouldn't be buying more of profitable companies, because those profitable companies are beaten down and you're getting them on sale. That way, when the market turns around, it's like a boomerang for you. Why wait to invest in a profitable company when they're at the high? I mean, it's great to continue to purchase them when your dollar cost averaging and it's on automatic, because you don't know what the market's going to do, up or down. So if you dollar cost averaging, your money is going in at different prices systematically, and that's going to build your wealth. But you got to turn on that mindset when things go down, there's trouble in the streets. Go in and scoop up those quality companies. Stay away from companies that don't make money. And fast forward, if I can go back and do it all over again, I would have never bought any marijuana stocks. Just left it alone. But hindsight is always 20/20. I mean, let's go and look at cryptocurrency. I got into cryptocurrency back in 2017 with Bitcoin and Ethereum. And here came the government. The government got in the way of that. And so, same thing. So back from 2017's price to the price now, I'm glad I still held on to it. And then here we are with Bitcoin ETFs. And now the financial institutions are coming in because their clients want it in their portfolio. Now, because of the legislation that came through and the ETFs were approved, now financial advisors can actually advise their clients to have it in their portfolio. They can advise their clients to have 1% to 4% of Bitcoin or Ethereum or any other cryptocurrency in their portfolio. That puts weight behind this. But also keep in mind that all of the financial institutions are not on board yet. They got some retooling that they need to do before they even start offering it to their clients. So just because the ETFs are there, all the institutions aren't offering it to their clients yet, because they have things that they need to put in order to be able to offer it to their clients. So does that mean that the price is going to go higher? I don't know. I can't predict the future. And past performance does not guarantee future results. But you can go to YouTube, watch some videos. There's plenty of content on my page about cryptocurrency, and you can listen to some of that and draw your own conclusion about the future. The government's already trying to make its own, I think they already have it, their own stable coin. So the technology of the blockchain is not going anywhere. It is being utilized. It needs to be utilized to make the transfer of money internationally faster. And that's what I like about it, because it shouldn't take 90 days for something to settle, or somebody shouldn't have to wait 90 days to receive a payment because of that whole cycle. Send that payment on the blockchain, and that company can get their money and go on about their business to do what they need to do with the money. They're going to reinvest it somewhere else to buy products or buy services or whatever they need to do to run their company. They don't need to be waiting 90 days for invoice and all that stuff. So the blockchain is here to stay. So, but let me get back to what I said here. So I took some notes on when to sell a losing investment. You want to look at an investment, ask yourself, would you still buy it today? So if you wouldn't still buy that investment today, it may be time to sell. Sell if a single holding becomes too large, like more than 10% of your portfolio. When there has been a scandal or lawsuit, even leadership changes. Don't fall in love with an investment. Do you still believe in the company's future vision? Is just that investment down, or is the whole sector down? Is the company still competitive, or is the competition eating their lunch? Are they profitable, or when do they project to become profitable? So I'm gonna hold up right there. Let me mark this here. There's plenty of times where I've invested in companies that were not profitable. Facebook, Shake Shack, there's another one. Can't think of it off the top of my head, but it was after they IPO'd, and I have this thing called my IPO rule. 6 months to a year after a company becomes public, because now they've reported some quarterly results, and good or bad, but now you got public quarterly results being published, and you can make a decision whether you want to invest in that company at that time. You don't want to invest at the beginning, because majority of the time they're going to pop. And then when you wait that time period, there's also going to be a lockout period from when the early investors are able to sell their shares. So when they sell their shares, it's going to drop. So that's my IPO rule, is wait 6 to 12 months and then buy it. See where it's sitting at, see where it decides to settle at. So I'm not going to say don't buy companies that don't make money, but just make sure it's not all of your portfolios. Make sure you're not trying to knock something out of the park with. Building wealth is a marathon. It's a marathon. And that's all I'm gonna say right there. I don't know where it's going. Next I got here, is their revenue growing? So you got a company that the revenue is not growing. That means then they're not bringing money in the door. So if the company ain't making money coming in the front door, not to mention their expenses and then their net profit, they ain't bringing sales, bringing money in the door, then it's a dying company. Is their debt growing or buying other companies? So sometimes companies will buy other companies, and that puts a weight on their stock and their growth. You want to make sure you listen to the quarterly earnings report for some insight. The media won't report on what you may be listening for. And I'll stop this right here. The media will not report on everything in that quarterly earnings call. That's why it's important for you to listen to them. That's why it may be important to you not have a lot of investments, as far as individual stocks because we can't listen to all of them. I found a great app. I can't think of the name of it, but it's been posted on my page that I can get all the webinars, all the quarterly earnings reports from all of the major companies in this one app. So I just plug in the company's name, boom, it gives me all the quarterly reports, and I can listen to them. So that app has been a big help for me. So like I said, you're not gonna get all the information. Just like with Facebook, their most recent quarter report, they had great numbers. Again, Facebook makes money. Facebook ain't nothing but a doggone cash cow. Let's just keep it real. And they're just a cash cow. People spend time on there. And people spend time on there, guess what? People are going to advertise on there. And no matter how much trash the advertisers talk, and I've watched this too, advertisers talk trash, we're going to stop advertising on there, we're going to cut back our advertising. Okay. They come right back because their numbers show. And when Facebook was playing around with their metaverse, I looked at it like this. Y'all giving them the money for them to play with. I mean, if they didn't have the money coming in the front door with people spending time on Facebook, advertisers spending money on Facebook because that's where the eyeballs are at, Facebook wouldn't have this extra play money to go playing around trying to create a doggone metaverse. Now, I ain't got nothing against the metaverse. I mean, it may be a great thing for the future. Only thing I personally want from it is to be able to put on some goggles and put me in a different part of the world where I can see it in almost real time. And that's what I want to be able to do with some goggles. So I don't own any of it, but in the future, maybe that's what I want to be. I just want to be able to put those on and travel somewhere and be able to see things from a clearer view than what I can do on the computer, and maybe even interact with it somehow with a metaverse type experience. Man, it's a damn 22-minute video. Hope y'all still watching. But yeah, Facebook is a cash cow. And so in their last quarterly earnings report, great numbers, but their forward-looking guidance said that they're going to start spending money. And it's like, okay, here we go. Here we go. You're spending money. What's it going to be a metaverse now? They're still going to spend some money in the metaverse, but they are going to be spending more money in artificial intelligence. Because, how can I say, I posted this before, from what they see and what they've already done with artificial intelligence, it's exceeded their expectations. So if you got something that's exceeding your expectations, you want to double down on it. And that's what they're doing. They're making an investment in the future. And this investment that they're making now probably won't pay off for another 3, maybe 5 years. But they have to make this investment, otherwise they become somebody's lunch, or somebody be nibbling off their crumbs and taking bigger bites and bigger bites at them. So they want to stay ahead of this. They got to make the investment, and they have the money to make the investment. So why not? Yeah. So I'm gonna leave that at that. Do you have someplace else to reinvest those funds to get back growing again? So you can have a stock that's not doing anything and its current value is lower than what it was, what you purchased, but do you have someplace else to put those funds to get you back growing again? So you got to find another investment. You want to sell if it drops 7%. Sometimes this could be too soon. So again, just because something drops 7%, that automatically doesn't mean you sell. So you have to look back at, look back at you, the reason why you invested in this company, and you may decide to hang on a little longer. Amazon has taken some big drops in its past, and it's bounced back. Bounced back, has done stock splits and all that. So sometimes you just have to chop it up as a loss. Sometimes you may just want to say, I'm done. I'm gonna wrap it up and sell it. It's a tough decision. So it's a tough decision, and I know for a fact. But like I said, look at your whole portfolio and see how much of a percentage of your whole portfolio it is. And if it's not really affecting your whole portfolio, and you still believe in the future of it, then maybe hang on to it some more. See what's going on in the news about it. See what's going on in their future projections about what the company has going on. Selling losers is a tough decision. It's a tough decision. If you create steps for yourself, you'll feel better about it selling. It's just another muscle that you have to develop in these financial streets. So that's everything right there. And like I said, that's notes that I've taken, and then since I took those notes, I plugged it into my my cheat code document. And if anybody wants access to this cheat code document, just send me a message and say you want access to that cheat code document, and then what I'll do, because those notes right there are tagged into a document with a bunch of other stuff in it, and so I'll just extract that out and put it into a separate document, and then I'll assign a domain to it, and that way it won't be just the long Google document link. It'll be a shorter domain link, and then I'll make it public and I'll give you access to it. So, and it's a investing cheat code document that it's like, if I had to go back and do it all over again, essentially this is what I would do. And it's a ever growing document. I go back to it from time to time, add different things to it. So yeah. All right, y'all. Wrap up this, man. Woo! Less than 30 minutes. 28 minutes. All right, so peace out.